Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdMail. Today's episode, we're going to be chatting about setting up a solo K. If you just left your job and you have some consulting income, can you still make a contribution? Yeah, you can. We're going to go through the formula, whether you can do pre-tax, Roth, and how that works. The second question is going to be involving selling an interest in an LLC to a friend who's using a self-directed IRA, and what documents do you need to actually paper that transaction? And generally going to need a membership purchase agreement, generally what you're going to need, but I'll go through all that as well. Third and final question of today's podcast is going to be dealing with, if you invest into an LLC, what does the manager of that LLC, after you invest in, actually need to do with the state to affect that transaction? So should be a fun and impactful podcast. So without further ado, let's get going. First question is from Pierre H. of Park Slope, New York. And Pierre wants to know, I just left my job and moved out my 401k at work. I'm over the age of 50. I also have a consulting business where I will earn another 80K in 23. Can I still make additional 401k contributions? So the answer is yes, Pierre. So let's say you maxed out your 401k at work, just to keep it simple, 23 and you're over 50, that's 30K. And now you made 80K. And if you have a single member LLC, you'd be able to do a profit sharing contribution of 20% of 80 or 16K. Or if you had a S Corp, you can do 25% of 80, okay? And then the difference could, if you like, could then be put into Roth through a mega backdoor Roth 401k. So the way that would work is, let's say you had an LLC, okay? And you put in 16, right? 20% of 80, because you maxed out the 30. So that's 30 plus 16, that's 46. And because you're over 50 years old, the max you can do is 73.5. The difference between 73.5 and the 46 can be put into a Roth through the mega backdoor Roth 401k, and then you can leave it in the 401k or move it to a Roth IRA. If you had an S or C Corp, you can do 25% of 80 or 20K, and then 20 plus the 30 is 50, and then 50 minus 73.5 is 23.5, which you can do in Roth. You wouldn't get the tax deduction, but you might as well save in the Roth 401k, since all the income and gains would flow back to the Roth tax. So Pierre, you got a lot of options. Give us a call, or shoot us an email, or chat us, or leave a comment question. And we have an amazing team of tax professionals that have incredible, vast amount of knowledge in this area, and we'll customize a structure and solution for you. But you got options, Pierre. Second question is from YouTube, and this person wants to know, I have an LLC that I want to sell an interest to a friend who will be using a self-directed IRA set up with you guys. What documents do I need to do the deal? So generally what you're doing is you're going to be selling an interest to a friend that's a self-directed IRA investor. Your friend, I assume, is not a disqualified person, not a related person, not a lineal descendant, not a 50% or more partner. So how do you do it? So it's simple. You're generally going to want a membership purchase agreement. It's kind of like a stock purchase agreement, but with an LLC, there's no stock. It's membership units or interest. So it could be I have a sample one. If you're a client, you can ask me. I'm happy to send you a couple pages. Doesn't have to be anything fancy. You just want to include who the buyer and seller is, the amount, whether there's any contingencies. If it's super, if you want to make it more complex and you're talking big numbers, you probably want to get a lawyer or law firm to draft it, because you're going to want to have certain reps and indemnifications and more protections. Well, at least the buyer would want. You as the seller, probably not as interested. You'd want to keep those reps as light as possible, but the buyer would want it as tight as possible, because he wants to make sure that you're not selling him any potential liabilities he's not aware of. So really just a membership purchase agreement. That's all you kind of need. And then you're going to want a new operating agreement to show that the IRA is now the owner. So you would amend the operating agreement. Let's say this is the second version. It'd be an amended and restated operating agreement. And you would now show you own whatever 80% and your friend owns 20%. And then you just have a membership purchase agreement that would show the purchase of those membership units. Thank you. Really good question. So thank you for that. I don't really spend a lot of time on the actual transaction, the papering of it, which I should, right? It's actually pretty important. And actually, this question on LinkedIn kind of goes to that same trend. So here you go. I will be investing in an LLC that my friend owns. My IRA will own 25%. Do we need to file anything with the state where the LLC was formed? So another superb question. Generally, when you form an LLC, you file with the state a formation, let's say Florida, New York, wherever the state is, Texas, and you're going to file articles of formation. It's going to generally ask for the registered agent address, the business address, who the manager will be. Generally doesn't ask who the members are. I don't think any states really ask who the members are. They generally ask for the member or manager. Most people just write the manager, because if you change the members, it gets more confusing. So you're going to change the manager probably less frequently than changing the members. So essentially what would happen is if you sell your interest to a friend, or you'll be investing through an IRA, what will need to change is you're going to have to amend the operating agreement to show that your IRA is going to own 25%. So there'll be an amended and restated, just like the previous question, to show there's a new owner. You'll probably want a purchase agreement, a member unit or membership interest purchase agreement, showing that your IRA is actually what it's buying, the terms of the deal, the price, any representations or indemnifications based off the transaction, what state law, arbitration, what governs if there's a problem or a dispute. And then ultimately, when you file a tax return, since you'll have a partnership, so it's going to be more than two owners, the K1, which is associated with the 1065 partnership agreement, is going to show each partner who they are. It's an IRA, an individual, a business, what their capital account is, how much they invested, whether they took distributions or added more money, and what their percentage interest will show. But ultimately, you don't need to file anything with the state. If you add a member, you generally don't have to file anything with the state, especially if the LLC's manager managed. You just provide the state with the manager's name. You don't need to supplement that. Imagine how hard it would be if you were like Apple or Tesla and you have hundreds of millions of shareholders and you have to update this every minute. You obviously couldn't do it. So it's not necessary to update the members with the state, although if the LLC is member, it's member managed, not manager managed. Some states will ask you to update that. So just be careful. I always suggest when you form an LLC, just make it manager managed. It's just much easier to administer. Because if you add members, you don't have to do anything. But some states do ask you to add the member. Most don't. The biggest requirements is you file the partnership return. The K1, federal and state, will show who the members are. So the state or federal government, the IRS, could identify that. You'd amend and restate your operating agreement to show the new member. And then you want to have a membership agreement / purchase agreement to show the actual details of the transaction. So it's clear and precise for both parties. That's it. Not much to do on the state side, especially if it's manager managed. You don't have to change the EIN. You don't have to update the state unless you're changing like the president, the manager, things like that. But to add a new member, generally not. Member of the K1 and the operating agreement is what's really relevant to show these changes. So thank you, Pierre. Thank you, individuals from YouTube and LinkedIn. If you guys have questions, send them in. You could email us at info@IRA Financial, or you can leave a comment, question on YouTube or anywhere you listen to the podcast. You can also call us and just say, hey, this question's for Adam, or maybe someone on my team. I'm sure someone on my team will be able to answer it. They're super, super smart. We spend hours a week training. Yeah, we have a lot of fun kind of going deep into the code, reviewing taxable cases, IRS revenue rulings, and really making sure we're up to date and super on top of all the IRS rules regarding IRAs and 401k. So appreciate you guys listening. If you're watching on YouTube, much appreciated. Hope you guys have an amazing day and you enjoy the podcast, and definitely come back next week because it's going to be even more fun. So thanks and have a great day.